sound works, so the picture works. So I'm happy today. So as you can see on my smile, on my face. Why? Because we have Andrea Unger as a guest today for our community. I'm proud of that because I'm big fan of Andrea Unger. He was 4 times champion by Trading World Cup. In this Trading World Cup, I was second time, place third. So, and one time fifth. So, but never number one. So he was 4 times number one in this championship. So, and he started his trading career 2001. 2001, I didn't know about trading and how you can make money on with trading and with investing. So he started before I started to to focus on trading. So and he is also a creator of Unger method, a statistic rule-based and statistic-driven approach to trading. So 4 of his students, excluded me, so have also become World Cup trading championships, demonstrating that his methodology can be learned and replicated. So as you can see, we have here professional trader. So, and I hope we have everything okay with the technique, because now I see Andrea logged out and has to log in again. So I hope everything will works. So today, Andrea will share how professional traders identify and validate a real trading edge before risking capital. So give us 1, 2, 3 minutes until Andrea is logging in, and please write in the chat where you're from and how many years you have trading experience. So as long as we waited for Andrea, so so we are waiting for Andrea. Okay, so let's check a chat. Zurich, 7 years, 10 years, Germany. So 12 years, Robert. So from Germany again, 3 years. Regensburg, Germany, 6 years. In Regensburg, Audi car is produced. So then we have here Croatia, 10 years. I'm from Brilon. I hope the pronunciation was correct. Trading since 3 years. 30 years, Hans from Germany. So as you can see, our community includes a lot of experienced traders. So I'm proud of our community. So I see. So Andrea. So I can see Andrea now. So England, newbie. Oh, we have also newbies here. So Andrea, how I can switch on you? So Andrea. Here, Andrea.
Yeah.
Hello, now it works. So I'm so happy. So as you can see, as a trader, you have to have patience. And if plan A doesn't work, so you have to be patient.
It was a negative trend.
Yeah, you will stay on your hold on your plan. Okay, Andrea, you are here. So I already introduced you, as a 4 times champion. So I already introduced you as a special guest, As you can see on my smile, I am very happy you are here and we have time today for our community. I already asked in the chat where people come from. So as you can see around the world, we have people from US, from UK, from Germany, from Europe. We have also experienced people. A lot of people have 6, 12, 4 years experience, but also newbies. So therefore, as you can see, we have very good community today, a lot of nice people. We have about 200 people here, and I'm proud to have you here for our community. And today, we will speak about you automated statistic-driven trading approach, which helped you to win 4 times Trading World Cup championship, and also your students. So excluded me because I wasn't number 1, twice number 3, but not number 1.
You can still manage it. I'm waiting for you.
Yeah. So as you can see, I have energy. So I have to have goals in my life. I'm young. So therefore, this is on my list. So Andrea, I give the stage to you. You are the special guest today. And if you want, I can also share you the content. Yeah.
Oh, yeah, I have a button here. I mean, it was.
Yeah. 1 second. This is
Here
the
we
presentation.
go. I did it.
And right, you have the button next in the previous slide, as you can see. Do you see right the button?
I see the slides now.
Okay. You see right in the corner presentation and video and so on, and all the buttons, audience, content, interaction, chat.
Yes, but I'm already presenting on my screen. I see the presentation going.
Yes. What I want to show you is the button for switching to the next slide. Do you see that?
There is. I can do it both with the arrows or with the next slide. I found it.
Okay. Everything okay now. So try it out. If it works, so then I will switch off.
It does. Yeah, it does.
Work. So very nice. So then let's start, guys. So Andrea, it's your stage. So welcome.
Yes, I thank again Max for inviting me here. I met Max in person the first time in October in Frankfurt, and it was a real pleasure and a surprise, because not only he's a very good trader, as he demonstrated, but also a very nice guy, very brilliant, which is not very common in the trading environment. So I was really glad to spend some time with him and to be here today. So, but it's a long presentation, so we better go directly into the topic. And I just want to go through my story as a trader. As you can see here, for many years, I traded like everyone else. I was using indicators, charts, interpretations, and at first I thought that successful trading was all about understanding the market better. So I mean, reading the signals, interpreting the charts, finding the right indicator. This was the main point. I was looking for a number of mix of indicators just to find the way. Then I discovered the real problem the hard way, because the way everybody discovers things in trading when you lose money. And the truth is that looking at past charts, everything seems easy. When somebody explains some patterns on a chart to you, you think it's easy, and they show you many examples, and you see that it makes sense, and you believe you can go home and do the same. Then, when you sit in front of a chart and you try to find that pattern that was shown to you, you start, I don't know, questioning, demanding, or whatever. So the doubts are constant, because in the very moment you have to put your money into the market, obviously it's normal to have more doubts than when you were paper trading or just reading about theory. And the point is, and I think everybody knows this very well, that one day it works very well, and the next day it doesn't. So we start changing indicators, we change the time frame, change the market sometime. And every time we do so, we think, okay, this time I got it, I found the key, until it stops working again. This is very common, and I believe if you are traders, those, Max said, are already experienced traders, know, and they imagine they pass through this over and over again. If they are still here, because they overcome it brilliantly, probably, and successfully. Now, the point is that when we encounter this kind of failure, we start to doubt. Is the method wrong? Is the market? Or am I wrong? This is the worst thing, when we doubt about ourselves, because we think it's our fault. We are not finding the way to go the right way in the markets. And I've been there. And so, well, at first, I just bought stocks based on instinct or rumors. My colleagues in the office, when I started studying, I liked the macro. I studied books, technical analysis, of course, indicators. The problem remained the same. And the more I tried, the more I realized something was missing. I mean, I was still in doubt. Something was missing, because I thought somebody managed it, somebody is doing it, so I should be doing it as well. So there should be a way to go, but I've not found that way yet. This was a point. So I thought back. I made engineering studies. I'm a mechanical engineer, master in science in engineering. And I asked myself a very simple question with the engineering mindset. Why do we measure anything in engineering? If you are engineers, you know. And why does almost no one measure anything in trading? When you draw a chart, when you draw a trend line, when you put resistance, support, head and shoulders, you are not measuring. You are just interpreting, and you don't really measure. So the point was, why should I measure things also in trading? Why nobody does? And so this is when I realized something very important, actually, that changed. If I can't measure it, I don't have an edge, because I'm sort of driving in the dark. If I don't know what numbers I can find, what I'm looking for, if I don't know what I can find. So the point is that we don't need to understand the market. We have to test it. This is not very human, because in our human relationships, we try to understand each other, empathy, we try to cope with each other's feelings. The markets is different. Markets is sum of moves, of movements, up, down, whatever. And we have to test what could work inside that environment. The test means run through numbers which can tell us if we're doing right or wrong, or give us a trace, the way to go. So from that moment on, I completely changed my approach. No more intuition, especially because I didn't have that much, actually. No more interpretation, no more things like I think, I believe, all that, can work sometimes, but most often doesn't keep on working for a longer time. So I started building strategies based on rules, data, probabilities, and risk management. I know also Max is a great fan of risk management, and I believe that every long-lasting trader is a fan of risk management, because the first thing we have to control is always risk. But here you see different names. Data, probabilities. These are things related to numbers, to statistics, we may say. And you know what Max told you, this approach took me all the way to the highest level of competitive trading, and I was able to win 4 times the trophy of the World Cup Trading Championship in the futures division. These are the equity lines of the 4 different victories, and you see they're very different achievements, from 672 in a very volatile year in 2008, down to 82% in 3 months contest after the PFG Best bankruptcy. They restarted in the fall of 2012, and they invited me to participate, as I withdrew actually in 2010, but so I did it again, and I was able to win that edition too. You also see that these equity lines are not very nice, I might say. I mean, I don't think anybody would be happy to trade this kind of equity lines. But this is real trading, first of all, and second, it's real aggressive trading, because these were championships, contests. In a contest, you go at your maximum, you risk very much because it's a contest. You have to win, you have to go put gas on everybody. Obviously, my personal private trading doesn't have this crazy behavior, because the risk I use in my personal trading is much lower than the one I risk it there in the competition. And obviously also the returns are smaller. This is pretty obvious. If these returns would be possible every single year, we would all be billionaires. And this is not the case, obviously. And also it's important to say this because of the false expectation that many times mislead aspiring traders. In any case, these equities are not the result of intuition, because I was trading following my strategies, and they come from rules tested on historical data and executed with discipline. It was 2008, the first victory, and today we start testing on data from maybe 2010. So, but I remember I had the data from 2001 on TXT files, on the mini S&P 500, on the NASDAQ, on the DAX as well. And I was testing that all through in Omega Pursuit 2000i of TradeStation. Max said something about me, but maybe it's better I also introduce myself officially. I have been a professional trader since 2001, when I quit my job to trade for a living. And I'm so far the only four-time winner of the World Cup Trading Championships in the Futures edition of the annual competition. And in 2015, I founded the Unger Academy. I'm also author of two best-selling books on trading, the Unger Map and the Money Management book. Somebody maybe knows as well. Now, just going straight to the point, I just want to share one of the memorable moments in my trading career. This moment, I will never forget it, of course. And I can tell you that I'm proud to show you this because this is sort of an arrival and also for a starting point, both from different points of view. And it's an excerpt from the 2010 World Cup Trading Championships Award ceremony in Chicago Board of Trade, inside the pit. Let me show you this because it brings back nice memories.
Andrea, please step forward to receive your first place pewter Bull and Bear trophy.
Yeah, so you got the training floor going.
Okay, yeah. The bad thing about this is I see I was much younger and things changed, but okay, we have to live with it, and never mind. But this was a very important moment and a rival point, because it confirmed it was the third victory in the contest, and it was a starting point, because from then on I started being invited to events, presentations, and slowly my presence as a trader all over the world increased. 2015, I started the Unger Academy, which then became a big thing later on. And we're here today to speak about that as well. So, coming back to the core of this, I didn't win because I can predict the markets. The prediction of the market is one of the worst things you can imagine when you think about trading. I won because I eliminated interpretation. It was not me. It were my strategies based on numbers. And I turned all the trading into a process: rules, tests, and data. Data come in front as well, because we start building rules on data and we end with data, where the data we end with are the metrics of the system, so that we can decide if the system is good or not for us. And I can tell you that also my students had done the same. Max said this as well. They became as well world trading champions. Here we can see 4 of the most representative: Stefano in 2017, Petra 2018, Lorenzo in 2021, and Ivan Sherman 2023. He's really a great guy. I just met him recently in Spain, and I'm very happy to stay connected to him and to other guys as well, of course. But of course, not all my students aim to compete in a World Trading Championship, because somebody just runs on his own. And here you can see this is an award ceremony we held recently in Padua, in Italy. We had the second live summit of Junger Academy, and these guys here were those who were awarded with these trophies you can see on the left or right, all those who applied the Junger method to their trading and realized gains of at least 50,000 euros for the trophy on the left, or 100,000 euros for the trophy on the right. These guys were officially awarded during the ceremony. It was a great moment for me personally, because I'm happy when I see successful people thanks to what they got from my teaching, but also for them, of course, because not only they were successful in trading, but they also were officially awarded in front of over 200 people, 350, I think, or something like that. And this was something really, really emotional. So you see, not only trading champions, but also private trading champions are part of the project of the Junger Academy. And I don't want to boast about my students' results, just because it proves one thing, that a rule-based, data-driven approach can be taught and replicated. Just because it's based on data, I'm not a wizard of the market so that my talent makes money. No, I base my decisions on numbers, and the very same numbers can be used by anybody with the same approach, and they can obtain similar results. This is the proof. That's why I showed you successful students, just to prove this. So the problem isn't the market, it's the method you're using when you face the markets. And I want to show you 3 things today. First, why most people lose. They lose money in the markets. Second, what changes when you stop interpreting the markets and start measuring it. And then the 5 pillars of the Junger method that turn all the trading approach into a process built on rules, data, and risk management, as I mentioned earlier. But first, I would like to ask you a brief question. Have you ever tried trading and it didn't go the way you hoped? Well, I imagine the answer, but of course, you never know. But this is the question. I think you feel the answer inside. And I can tell you that if the answer is the one I suspect, unfortunately, you are not alone. This is very common to anybody approaching the market for many reasons. And the truth is, the sad truth is that most traders lose money. And according to statistics, this is around 70 to 80% of retail traders. This is a source of SCA ESMA. It's not a 98% or something that you are told maybe in some forums or communities. No, it's 70. Official data say 70 to 80%. But there is also an academic study of more than 400,000 days, and only a small minority are profitable over the long term. So it means that even in case they are profitable at the beginning, later on they start losing their touch. And even a smaller percentage continues to achieve consistent results in the years that follow. This is another source, Barbour, Lee, Liu, and Odian. They do traders rationally learn about their ability. 400,000 traders, a big sample. And the studies on investor behavior show that many traders trade frequently, react to price movements and news, and frequently change their trading decisions. This is maybe one of the worst things to do when you approach trading. Because if you choose a method, you have to stick to a method. Of course, if the method is wrong, you might change it. But the problem is that these people most often jump from one approach to the other with no logic. So the point is, if most retail traders lose money by trying to interpret the market, how do professional traders operate instead? The question is, there are funds, there are institutions, they make money. So what do they do actually? So who really moves the financial markets? So most of the trading volume in the financial markets is generated by banks, of course, hedge funds, market makers, and asset managers. Retail traders account for only a very small share of the total market volume, which is pretty obvious. We are not the rich guys. And I can tell you that algorithmic trading is a huge part of today's market. So several studies show that a significant share of the market volume is generated by algorithmic trading. And of course, some of the world's most famous and successful hedge funds are fully systematic. Just some examples of Renaissance Technologies, Two Sigma Investments, D&D Shaw and Cooper, and AQR Capital Management. These funds are well known for relying on quantitative models. Jim Simons, who recently passed away, you all know probably the Medallion Fund of Renaissance Technology. It had 66% average annual gross return, which is about 39% net after fees. And it had consistent results for more than 30 years. So, I mean, this is obviously, we're talking about the best here, the absolute best. And it's something that probably we will never be able to achieve in the same way. But it shows that he chose a way to go, which is the same I chose with different results, but it's a way that was and is consistent. And René says it became famous just because it's quantitative and systematic models. But this is a fund that manages billions of dollars and has enormous resources. The point is that the underlying principle is exactly the same. No gut feeling decisions, but numbers to build decisions. Rules, tests, data. This is the key. So if retail traders who lose money mostly rely on intuition, while the consistently profitable professional rely on a systematic approach, I'd say it's worth taking a closer look at what a systematic approach really means. And to understand it, because I believe that I talk about systematic, algorithmic, quantitative, most of you are a bit afraid of this, get frightened because, oh, that's too complicated. It's not anything like that. We are not talking about complicated mathematical models. I would just want to look at an example. And I want to show you a development process. When we develop strategies, approaches, models, we normally focus on one market at a time because we are trying to understand what each specific market normally does, how that market normally behaves. So we try to identify the market with some tests and then to understand how to face it. We are not looking for a model that works on every market, every time frame, because actually I don't think it exists, but it's not what I mean with systematic approach. So we study that market's unique characteristics and then build a strategy that takes advantage of them. For example, unique characteristics can also be very simple. On crude oil, we would probably build some trend following strategy. On the mini S&P 500, we will develop a counter trend strategy. Just because these two markets have a different behavior, a different reaction to the moves, to the momentums, and so on. And so if they react differently, we trade them differently. Mainly, we can build many strategies, of course, but mostly we focus on the way to go to find the market's identity. So we define entry rules around key price levels, such as the previous day high or low. We don't look for complicated points to enter. No, we just look for some key points, key levels, where there is reaction when these are hit. And normally the high or the low of previous session or of the last 5 sessions, or even of today's intraday sessions are good levels to use as triggers to enter a position. We define exit rules either at the end of a trading day, if we work on an intraday, or based on other predefined conditions, time stops or other kind of exits. And then we test some price patterns as trading filters to optimize the strategy performance. Last but not least, we can also do this before we define and optimize the stop loss, and when it's appropriate, the take profit. Be careful. This can be done before, later. Important is we use a stop, and not always, but we can also use a take profit. The stop is important. We don't have to leave any position open to hope. We have to have an exit strategy. Normally, a hard stop is what we use. So what we do, we take a market, we simulate with very simple entries what the performance would be if, for example, we buy the breakout of yesterday's high, or we sell the breakout of yesterday's low, and we keep on doing so. And if we see that the performance is promising, so I mean, if we notice that the market is reacting well to that kind of impulse, then we go deeper into development. And in this deeper development phase, we look for price patterns that improve our entries. The price patterns are setups on the charts that we can code into the script. And these price patterns give us different results. So, for example, stupid example, we buy at breakout, but we do this only if today was a down day. It's going down, for example. Or we do so only on Tuesday. Or we do this only if last week Friday's close was more than 1% higher than previous week's Friday's close. These are all examples, I mean, just the first that came into my mind. And we see if the results improve or not. So we understand if that specific price pattern has a good effect on the overall strategy. I just want to show you an example now. First, we take the historical data of the mini S&P 500, most important future market in the world. And we test this very stupid rule. Very stupid because it's very simple, not because it's stupid. As said, we buy next bar, this is the code. What we do is, we sit here, today market opens, we look at the high it recorded yesterday, we look at the low it recorded yesterday, and we buy if at the stop order, if it exceeds the high, or we sell short if it exceeds the low of yesterday. So actually, we work at a very simple breakout. This is not a strategy, it's a test on market's behavior. It might be a strategy, I doubt it would be effective, but it is just testing how the market we are working on reacts to external inputs. And this is, we mean S&P, daily bars. So you see on the chart, if you can see this, how it enters and exits the market. And this is the result. The equity line we would have had starting in 2010, 2011, I don't remember here. And this equity line is a disaster. This is a bad equity line. And this is an equity line on a breakout strategy. So here we understand immediately that mini S&P 500 is not a good market to trade on a breakout basis. Because if we do this in a very simple way, it produces these very bad results. These are bad results. It's a terrible equity line. Well, it didn't go anywhere for a while, but then in the last period, it's a disaster. So we understand that this market is not the best to do so. We should probably use another approach. It would not be recommended to insist now on this strategy, trying to mix in indicators, patterns, as I said, whatever, to filter trades and to find those which work, because that would be most probably an overfitting exercise, trying to get something nice out of rubbish, which is this. So this is, if I see this, I just drop the idea to work on a breakout on that market as a starting point, of course. I don't like it. Why should I waste my time or invest a lot of my time to get this thing to work. This is horrible. So we go with very same process, another market. In this case, gasoline futures. I know Max likes gasoline. He likes to pay for gasoline because he knows that gasoline is also paying him with his trading. So I like gasoline for other reasons, but we do the same test, historical data, and analyze the equity curve. This is gasoline, okay? I don't think we can deduct very much from this peak anyway, but this is the equity line. It's not obviously the most beautiful equity line in the world, but it is completely different from the one we saw on the S&P 500. This equity line is promising. This equity line shows me that actually gasoline has a very nice reaction to breakout strategies. It shows me that gasoline has a tendency to continue to move in the direction of a breakout because we are making gains, we are making profits. So it means that our entries were effective. Well, not always, but these were very simple entries. So we can't pretend that everything is beautiful just with a very simple entry. But this is promising. This is a market I would work on based on that principle because I see that there is something that we can scratch out from this market. Here we can invest time to trade on a breakout because this is a promising market. And this is the very first test. I was able to take a peek on two markets. I know now that S&P 500 is not good for breakout. Most probably, I should trade it with a counter trend logic, buying dips, selling highs, things like that. And I can test that with another code, of course. While gasoline shows a very promising behavior on breakout. And obviously, seeing this, most probably gasoline would be a complete disaster if we try to trade it counter trend because it's the opposite behavior. But you see, same approach, same logic, completely different results. So there is not the unique strategy for all the markets. There is a strategy that should follow the identity of each market. Here on gasoline, we will trade on a breakout. So what we do, we have found a potential statistical edge because we see that when we enter the breakout of the range of yesterday, high or low, we have a rising equity line. So that move continues to go in our direction. We have the odds on our side because this system showed to make money during the years. And the main point is obviously that our job as a systematic trader doesn't stop here because I told you this is not a final strategy. This was just to tell us that that market is promising if traded on a breakout. So we have identified a solid foundation. Then we continue further developing the strategy. So we had an optimized price patterns, stop loss, take profit. I can tell you, among the price patterns we use on this strategy, the one I will be showing now the results immediately, I use one which that pattern, I can tell you, yes, it works very well on most of the markets with a trend following behavior and therefore with a breakout strategy. And it's a pattern that enters trades only if yesterday's daily bar showed distance between open to close, which is smaller than around 50% of the whole range. This means there has been some indecision yesterday. When you have a very wide bar that starts at the open of the lower and goes up to a high, there was a strong, very strong move. And this most probably doesn't allow another brilliant move the day after. But if yesterday was a bit choppy and the market started, went down, went up, came back, and in the end, from open to close, it didn't move that much compared to a whole movement of the day, that kind of setup is very effective for a good breakout trend the next day. Because it's sort of, okay, I had a pause, I just took a rest, but tomorrow I'm ready to go because I'm fit again. This is what the market does. In this case, this is one of the patterns we use, and it's the most effective to transform the equity line from the one you saw into this equity line and these profits you see here. And this is something very interesting, because you see, this is an equity line we could trade actually, and it's based on the same principle. We enter breakout of yesterday high or yesterday's low, but we do so only if yesterday was a day where the body of the candle was smaller than, in this case, 55% of the rest. But I just, as a detail, normally I use 50%. If it works, I might refine it a bit, but normally 50% is the go, no go limit, half of the range. And it works very effectively. Important is that when you use a pattern to filter your trades, you can see the logic behind the pattern. Because it's the difference between you, human being, performing the test, and the machine performing the test. In theory, I could put everything into a machine and let it machinate all the patterns and give me the best strategy in the world. But it would take just the best in the numbers terms. It would never understand what it's doing. I want to understand what I'm doing. So if I found a pattern, it is very, very promising to filter the trades. I look, what is this pattern? What does it mean? The pattern is telling me that yesterday was a day with indecision in moves. It makes sense, because I know that in the markets, indecision is often followed by decision. So as I'm looking for a decision move, if yesterday was a quiet day, today might be the right day to go. So I have to understand this. I want to understand it. And if I understand it, I'm happy to use the pattern. As you see, the process was very simple. We started from a basic idea. There is no computer science or whatever. Basic idea is promising. Yes, we filter it with patterns. We play around with stop and profit just to have it reasonable. I never take the very best value for stop or profit. Maybe here was about $2,000. Maybe stop loss on gasoline, it's okay, and take profit. I think it's over 8,000 in this case, but it's not so important. The most important part is a model that works. We refine it, filtering the entries, and we do use a stop loss, and that's it. So this is the key. I mean, it's not so complicated, but obviously there is a lot of work to do. When you have many markets, you study on every market. Every market is different, so you have to analyze every single market. But you see how simple the process is, and develop a method. You have an idea, choose the market. The logic, is it trend following, mean reverting? You decide the entry and exit. You filter with patterns, stop loss and take profit, and you have a final equity. That's it. There is no rocket science inside here. It's a very simple process, a development method. This is so important. And this is exact process that both my students and I use successfully. And it's known as the Unger method, just because I'm a lazy guy, so I try to put everything in place with a method which is replicable, and I don't have to think too much every time. So this is it. And now we look at the 5 questions that turn systematic trading into a process. You see, the questions are around the Unger method: confirmations of evidence, precise rule, measurable edge, how much should I risk, single strategy or portfolio. Let's go. Am I looking for confirmation or am I looking for evidence? So before deciding what to do, many traders fall into the trap of a confirmation bias. This is very true. They observe market movements and form an hypothesis. Maybe they see something in the markets and they think there is an edge. So they try to convince themselves based on intuition that their hypothesis is correct. This is the point. And they build trend lines indicators to confirm what they already believe. So the average trader looks for confirmation of his own idea. The systematic trader looks for evidence, and evidence is based only on numbers. So if I see something, I test it, and then the numbers will tell me if it works or it was just my idea. We don't believe the idea just because it sounds compelling. We just put it to the test. And sometimes I can tell you that's a bad way to go, because sometimes I see ideas, beliefs that fail completely the test phase. But I'm happy because I save some money not putting my money on wrong trades in the market. Question 2, can this idea be expressed as a precise set of rules? So if I have an idea, it has to be understandable by a computer. So it's not enough to say, I buy when the market looks strong. You need to turn it into a precise rule. I buy when X happens in this market during this time window, under these conditions, with this stop loss, all numbers put together. If a rule cannot be written down, it can be tested. If it can be tested, you don't have a method. So I mean, the strong concept is a concept that the computer doesn't understand. Do this if it's strong. What does strong mean? If I tell you, do this if the market has gone up 3% in the last 2 days, then I define my concept of strength. It's strong if it went up 3% in the last 2 days. Okay, fine. This is numerical, understandable by everybody, especially by a computer who can look for all the situations where that thing happened. But just if it's strong, this is something that many gurus tell you. Look for strength, look for weakness, but how do you measure it? How can I interpret if it's really strong or not? Once I define it with numbers, and once I tested if those numbers are good for my trading approach, good means they made money in the past at least, then I can define it and replicate it tomorrow if the same condition happens. So there is no room for subjectivity in the Unger method. No subjectivity, nothing. 3, has this idea demonstrated a measurable statistical edge? So the back testing is just about, it's not about predicting the future. It's about answering one specific question. Has this idea demonstrated a statistically meaningful edge in the past? The Great Liquidity Curve is not enough. Backtesting is just the first filter. Then you need to determine whether a strategy is robust, whether it makes sense, what I mentioned before, and whether it has been overfitted, because you can put so many conditions together, you get a beautiful line, but you know that you were tricky, and whether it can perform under different market conditions. So it's not the final number, it's just the shape of equity. If it's too nice, probably it's not true. And many other things. You have to look at something which has to be real, and not only real, but also make sense. So if it's based on rules that make sense, and it shows a behavior that makes sense, then you have something that you can work with. Just a nice thing is not enough, and most often may be misleading, because, as I mentioned before, you might be victim of overfitting, having put too many conditions so that you clean out every bad trade and you keep only the best of the past. So we don't look for strategies that look good on historical charts. We try to build strategies with sound logic, validated result, and disciplined execution. Disciplined execution is something that goes through the machine anyway, but we have to be sure that the way we want the trades to be filled is logical and can really work on the markets as well. All this, anyway, is explained in the Unger method approach. Then, how much can I afford to lose without compromising my long-term success? Because the inexperienced trader asks, how much can I make? While the professional trader asks, how much can I afford to lose without compromising my long-term success? Because in trading, returns are what everyone wants to focus on. We all think about the money we make, but we really have to focus on how much we can afford to lose. Important, we will be losing someday, okay? It's important that the day after we can still trade, because if we lose too much, we won't be able to trade the day after. This is a very important point. It's a very important concept. And the risk control is fundamental to be able to trade tomorrow and the day after tomorrow and even later on. In fact, the Unger method doesn't start with profits. It starts with concepts of survival, drawdown, and capital management. These are the pillars on which I measure everything. Is this sustainable? Does it allow me to survive? Yes, then I can consider it. If it's just a crazy idea, coin toss, no, it's not for me. Maybe good for you, it's not for me. Then the question 5, one of the most important, is am I relying on a single strategy or on a diversified portfolio of strategies? So the average trader looks for the strategy that works, the idea that works. The systematic trader builds a portfolio because the professional doesn't look for the magic system. They know it doesn't exist. They build a portfolio of strategies designed to perform across different markets, market conditions, and trading logic. It's very important because we don't need to have a portfolio, a team of strategies, all beautiful. We have good strategies put together, and good strategies put together build a beautiful portfolio. It's like a football team. Okay, football may be not the best topic, being Italian and you being most of you Germans in this period, but just consider it like you don't have all a team with 11 Lionel Messi. You have a team with many players, but 11 Lionel Messi probably would not win the Champions, while a good team with different characteristics of the players is probably the best choice to go. And the Unger method is not a strategy. This is so important. I don't have a strategy for you. I have a process for building and managing a portfolio of trading strategies. Because once I teach you how you can build a strategy, you understand that concept, you can build many strategies. Then once I tell you how you can put the strategies together, you have a key to go. Because you have a risk control inside the concepts of putting them together, and you have the knowledge to build all the strategies as well. Now, let's see why you should think in terms of a portfolio, not a single strategy. I just want to show you some equity lines of our database. Gold here, you can see it's a nice equity line, absolutely nice, but there are some periods, red circles here, where we have lower weakness, signs of weakness. Then in our strategy on DAX future, also here we have periods of weakness, different periods where a very nice strategy anyway suffered. And you can see that these periods are sometimes also very long, because in some cases they are 1 year long. I mean, it's not just a couple of days. 1 year without profits is not nice if you have only one strategy. Life cattle, avocado is here, also here, very prolonged periods of bad profits, we can say. Mini S&P 500, similar situation here. But now what happened when we combine these individual strategies into a single portfolio? We put them together. These four you saw, this is the equity line. And even for also here, there are some periods of lack of strength maybe, but overall, you can see it's much smoother and more robust. So you can see there's actually a huge difference here, really. So from single strategy to a portfolio. So you combine different strategies for a balanced and resilient results over time. This is the key to have a much smoother equity line. Obviously, there are many ways to build a diversified portfolio, depending on the amount of capital available, the money you can put into your trading. For example, there is an example here I run on a 20K account. We have a micro S&P 500, micro Nasdaq, mini DAX, micro gold, Forex, some CFDs, micro crude oil, light cattle, and lean hogs. Pretty small market. You can see a very nice equity line anyway. And then the same thing on a 50K portfolio. Again, we added some other markets like corn, 10 years note, Bund, soybeans, wheat. And you see the equity line is already better. You can see this one is better. Just because we were able to diversify more, having more money, we could diversify more. And on 100K, 100,000 euro account, you can see again, we were able to go through a better diversification and we got a better result in terms of the shape of the equity line. It was just an example. By capital on 20K, you use some equity index because we have micro futures, which can be affordable for 20K capital, Forex, which is also scalable, and some commodities, live cattle, lean hogs, cheap markets. On 50K, you can add grains, for example, bonds, fixed income, and so on. On 100K, you have a full potential to build a complete portfolio, let's say, and also to use the mini futures in case, to save money on commissions in that case. Not that much, but you save. So just to recap what we have covered so far. So we've seen that most traders lose money because they try to interpret the markets, chasing indicators, time frames, and intuition itself. Professionals don't try to predict the market's next move. They rely on data, rules, and statistical edges. Systematic trading starts with a simple question. Has this idea demonstrated a measurable edge in the past? So first, validate, then trade, never the other way around. And probably we did mistakes so many times. First we trade and then we validate. No, first validate, then trade. We've seen how the Unger method transforms trading into a structured process built on scientific thinking, clear trading rules, backtesting, risk management, and a diversified portfolio of strategy, which is the arrival point of it. So far, we have explored the Unger method, how we transform trading into a process built on rules, data testing, and risk management. But understanding the method is only the first step. The real question is, how do I actually apply it without spending years on your own dealing with software, data, testing, technical mistakes, overfitting, and constant uncertainty? And here is where the Unger Academy ecosystem comes into the game. Because around, inside the Unger Academy, you can find proprietary technology, ready-to-use infrastructure, a community, real cases, we're seeing the peaks, coaching, tutors, private coaching, and a team of research and development, which is one of the best in the world, for sure. You can do this on your own. I mean, some people did. I did it on my own because I started from scratch. But you have to figure out all of this by yourself. Find the trading ideas. Test them on historical data. Avoid overfitting. Build diversified portfolios. Set up all the trading software and a VPS. Manage risk and drawdowns, okay, and know when to intervene. All this is on your shoulders. That's why the Unger Academy is today much more than an online trading school, because it's, as I said, a complete ecosystem designed to help you put the Unger method into practice. It's not about telling you, teaching you the rules, teaching you the logics. Yeah, also, of course, also, but it's how to go through the whole process of getting from scratch to a complete working platform, working on your computer or on your VPS in this case. And as I said, the pillars are the ones you saw here: technology, the infrastructure. This is so important. Community, so many traders are inside the Unger Academy from all over the world. Tutors, coaching, and research and development. Just to look into this, research and development. This is important because we are educators, but first and foremost, we are traders. So we are constantly researching and developing new ways to trade the markets more effectively. And when we discover something and we see, we test it, and we got the confirmation it works, then we are there to share it with our students. We are the first who are interested in having things that work, having things that keep on working, having things that will work tomorrow. So this is the key. We are all traders. I want to deal with traders, and only traders have a real feeling about how the markets go. This is very important. And in addition to Francesco Placci in France and me, he's an option expert, I'm a futures expert. Our research and development team also includes two former Formula One engineers. They left Formula One world to join the Unger Academy, and they are here working with Davide, comes from Dallara Haas, and Pierluigi from Scuderia Ferrari. Two really brilliant guys, and not only a young age guys, but really incredibly skilled. I'm surprised I could meet two talented guys like this, and I'm honored to have them in my research and development team, coming from such a special world as the Formula One. So I mean, research is the engine that drives everything we do at the Unger Academy, and these two engineers are among the keys of our success. Thanks to Davide and thanks to Pierluigi. And obviously thanks to Francesco Placci France, who is working every single day with me and supporting me. Proprietary technology, over the years we have developed proprietary tools that make the work traders would normally have to do on their own, faster, more structured, and more efficiently. So we have the Composer AI, I will show you later on, $1 million database, the software Zeus, strategy checker. Believe me, all these things are sort of bricks that have been added to the wall, because we are not started immediately this way. Unger Academy was not the ecosystem it is today. It grew up together with our students, just intercepting the needs of the students, our needs in terms of technology or strategies, but also the needs of the students, how to best learn and put in practice. So especially put in practice. The Composer AI is a tool where you can get complete codes of the strategies, just choosing some rules inside the mask here, but also inserting instructions in a colloquial form in English, but also in German, it understands. And you see here, I want to decide which day of the week not to trade long. You write this, and the composer writes the condition in a language that the machine understands. So, I mean, no need to be computer freaks, no need to be computer experts. If you just understand something about logic, you can tell the composer to do the dirty job for you, because the composer is a great tool, and it shortens enormously the path to building a code for a new strategy. Just choose the rules, add your own rules and ideas inside the composer box here, and you get the script. Zeus is the software that puts everything together. When you have, I have over 300 strategies, but also if you have only 80 strategies, for example, obviously it's not easy to put them together, to build the best portfolio, to understand how to do so, and how to make sure that you are not overexposing on some sectors or whatever. Zeus is a software that takes care of all of this. Zeus is fed with the performance data of the strategy, and every month, I run it every month, it gives us the list of the strategies to trade. Not only, it also prepares all the workspaces to put on the machine, but this is a detail which is very important for me, because I like to have everything ready. But it builds the portfolio. It says, look, you have 300 strategies, but this month you trade only these 35. This is the list. The reason why these have this performance. Why can you put them together? Because you see these two strategies don't trade together, they trade on different moments. These two strategies have opposite positions, and so on. It calculates everything to optimize the employment of your strategies, considering risk and margins. So Zeus is really a great tool. It was born for traders, as said, and is for traders. Then we have a strategy checker, which is also very important, because this is our monitor that everything is running smoothly. We have 35, 40, 20, I don't know, many strategies working in an automated way on a computer, on a DPS. And we have to check from time to time that everything is fine, everything is in order. Strategy checker does the biggest part of this on our behalf, because it is connected to the platform, and it is telling us if there is some strategy which is not aligned with the broker. It is telling me if we are actually connected to the broker. It is telling us if we receive a data feed. It is alerting me through Telegram if there is any problem, alerting me when there is a new trade, the profit, when a trade closes, just keeping me on track. So I have a special worker on my side, which is the strategy checker, that is monitoring the situation on my behalf. The $1 million database, more than 50 strategies of the best performing strategies developed by our students. You have this database, you can go in there, you can choose the strategies, you can see the strategies, you can read the code, so you get the best ideas for your next development. The database comes with equity lines, you can see. Equity lines are shown in blue part, which is the in-sample portion, I mean, the data used to build the strategy, and then the red part of the equity is how the strategy performed once it was released. And you see this is a case, obviously, where everything was brilliant and very nice. But this is an enormous source of trading ideas, because you see what other students who came before you did, and this is the best work they did. So we put it here just at disposal of our students so they can get lighting ideas and build their own portfolios the best way possible. And here it comes, ready-to-use infrastructures. In the past, the student had to spend weeks and even months setting up trading platforms, market data, VPS, software, system configuration. Today, this is all already in place. When you join Academy, you join the program, you have your VPS with all the necessary software set up, ready for use the way we do using the Unger method. This is an enormous help, believe me, because I suppose you, as me, we all want to be traders. We don't want to be computer experts. We don't want to be IT guys. Maybe you are fine. I mean, perfect. I'm happy for you. But most of us are not. And it's frustrating when you have to spend hours your day trying to understand what something is not going wrong, why you did the wrong configuration on a software, all these things. Here, everything is ready to you. Just to have to turn on the car and drive. And then, obviously, personal tutors and coaches. Every student is supported by real people with coaches, tutors, success coaches, checkpoints to go through, and support sessions. So the value is not just knowing what to do, it's having someone by your side when it's actually to apply it, when the time has come to do things. This is so important, in my opinion, because I know that when we learn something new, maybe we lose focus, we lose commitment. But if somebody is pulling us aside, come on, now we have to do this. So it's an enormous help. And it's also a great help when I have a doubt, I can ask somebody immediately, get the answer. This is of enormous help. And this is something we didn't start with this. This is something that came later on during the over 10 years of history of Unger Academy, because we understood that this was a way to go to assure success to our students. And this is the team of the Unger Academy, team from over 40 professionals working for you, with you, every day, really. I'm here in the middle, but Francis on my right and all the others are there to support you. I think a team like this is not easy to find, really, and I'm really proud of this. Last but not least, students themselves, you, the students. It's a community and real world case study. You are in touch with all other students who came before you, and the ecosystem is also driven by students. Real cases, real questions, real mistakes, real results, and real comparisons. And the students come from all over the world. Max was very proud to show us that there were students today reaching from many parts of the world. Also, the Unger Academy has, you can see, students from really all over the world. You can see the dark spots are mostly everywhere. And we also saw this in Padua in our last live event, where people came from every part of the world, Argentina, Chile. By the way, Chile is not, I have to blame marketing that they didn't paint Chile. I want to change this. It's also from Chile, we have students, and New Zealand, and also New Zealand is not painted. I think marketing has an issue later on. But in any case, believe me, over 100 countries in the world, this is something which is great, really. And as I mentioned, all this has been enlightened during our most important international event in systematic trading, the Unger Summit Live. It has been organized in Padua. It was last April, in this case, last April. And here are some, you can see all these videos, testimonials, where you can see the testimonials of the students. You can find what they say: excellent company, simply amazing. After years of searching, I found a system that makes sense. Many good comments. I don't want to go through all of this, because you can find them on our website if you want, on our YouTube channel. And then there is the Hall of Fame. You remember the guys with the award. Here is another snapshot of them, people who put that in place and did make money the way we suggest, and were awarded not only with the money they made, but also with recognition from ourselves, which is a great moment in any case. You remember students who achieved the same goals as I achieved in the championship? And this is the Hunger Academy ecosystem. Research generates ideas, tools that help to test the ideas, infrastructure makes it possible to apply them, coaches help keep you from getting stuck somehow, and community and real-world case studies let you see how other students apply the method. This is inspirational in most cases. So you can notice that the Hunger method shows you how to turn trading into a process. The Hunger Academy ecosystem helps you apply it to your real situation. We have the connection between the Hunger method and the Hunger Academy ecosystem. It's a strict connection. There is an important point anyway. I mean, I have to say this. Not everyone has the right profile to enter this ecosystem. Depends on capital, experience, available time, expectations, and risk tolerance. So this is the reason why the next step is not to buy anything today or right now. No, the next step is to apply for a strategy session where we analyze your personal situation and determine whether the Hunger method and obviously the Hunger Academy ecosystem are suitable for you. I mean, we don't want to leave anybody out, but we don't want to deliver false expectations. So we try to identify every single case to be aware if it's the case to continue or not, or better, let it go. What you can do is you can book your free strategy session, as mentioned. You can choose date and time with the schedule which is available, and you can check your inbox when you get a confirmation email